Let's talk about investing in 2026. You know, it's a strange world out there. With just a tap on your phone, you can buy a piece of just about anything. But all that freedom, well, it's got a pretty serious dark side. On one hand, it has never, ever been easier to invest your money. But the flip side of that coin, it's also never been easier to lose everything. The same simplicity that makes it so inviting is exactly what hides some of the most dangerous traps. So that's what we're going to do today. Think of this as a mission to arm you with knowledge. We're going to find and diffuse 5 of the biggest, most devastating financial landmines out there so you can see them coming and just walk right around them. All right, first up is a threat that feels like it's straight out of a sci-fi movie: AI and deepfake scams. Scammers can now create these terrifyingly realistic videos of famous people, all promising you some secret way to get rich quick. And here's the trap. You're scrolling, and you see a video of a famous billionaire talking about guaranteed returns. It looks real, it sounds real, but the reality? It's a highly sophisticated fake, an AI clone built for one reason and one reason only: to get you to send them your money. Which brings us to our very first rule, and honestly, this one is huge. Real investing is kinda boring. Yep, anything that sounds super exciting, promising to double your money in a week, is a scam. I mean 100% of the time. You have to verify everything. Okay, so not all the traps are technological. This next pitfall is as old as markets themselves, because it's rooted deep inside our own brains: emotional panic selling. You know the feeling, right? The market drops a few percent and your stomach just sinks. That's a real psychological trigger called loss aversion, and it's powerful. Our brains literally fear losing money twice as much as they enjoy making it. The mistake is acting on that fear. The reality is, markets go up and down. That's what they do. Selling in a dip doesn't save you. It just makes your loss real. Think about it this way. Before you sell, a loss is just a temporary number on a screen. It's not real yet. But the second you hit that sell button, you turn a paper loss into a permanent loss of your actual hard-earned cash.
So the rule here is all about discipline. If you're investing for something 10, 20 years down the road, what the market does today is just noise. It doesn't matter. Seriously, stop checking your portfolio every day. Just let it do its thing.
Now, while patience is all about fighting fear, its opposite, greed, can get us into just as much trouble. That brings us to pitfall number 3, the all-in syndrome. We've all heard that story about someone who made a fortune on one stock and thought, hey, I could do that. The mistake is just so tempting, putting all your eggs in one basket. But the reality is that even the most solid, most promising companies can fail. A new competitor, a scandal, anything can happen. And if all your money is in that one thing, you could get completely wiped out.
The rule to protect yourself from this one is actually beautiful in its simplicity. It's called the sleep test.
Just ask yourself this one simple question. If that one big investment you have, that hot stock, suddenly dropped by half overnight, could you still pay your bills? Could you sleep soundly? If the answer is no, you've got way too much money in it. At that point, you're not investing, you're gambling. Let's move on to our 4th pitfall. This one is sneaky. It's like a silent killer of wealth that just eats away at your returns without you even noticing: ignoring hidden fees. You see it everywhere, right? Platforms screaming zero commission. Well, the reality is they have to make their money somehow. They hide their fees in things like the spread, that little difference between the buy and sell price, or in withdrawal charges, or in something called an expense ratio. It is never truly free. You might see a fee of, say, 2% and think, what's the big deal? Well, here's the deal. Over 20 years, those tiny little fees can eat up as much as 40% of your potential returns. 40%, just poof, gone. So the takeaway is simple. You have to read the fine print. Understand every single fee you're paying, because every dollar you save from fees is another dollar that stays in your account, working for you, compounding, and growing your wealth. And that leads us to our 5th and final landmine. Now, this one is arguably the most dangerous of them all, especially for regular people. Investing money you absolutely cannot afford to lose.
The mistake is thinking you can use your rent money or money for school fees for a quick flip in the market. But the harsh reality is the market has a terrible sense of timing. It almost always seems to drop right when you need to pull that cash out, forcing you to sell at a huge loss just so you can pay your bills.
This brings us to our final critical rule. Your emergency fund, your rent money, your essential living expenses, that cash has absolutely no business being in the stock market, period. That money belongs in a safe, boring bank account. You should only invest capital you are confident you can leave untouched for at least 3 to 5 years.
So we've navigated all these pitfalls. What does it actually take to succeed? It's not about being some kind of investing genius. It's about being disciplined. So let's wrap it all up with the Survivor's Toolkit.
It really just boils down to these 5 simple things. 1. Ignore the AI fakes that promise instant wealth. 2. Hold on to your long-term investments when the market inevitably gets choppy. 3. Spread your risk around so no single bad bet can sink you. 4. Watch those fees like a hawk. And 5. Protect the money you need to live on at all costs.
At the end of the day, you have to remember this. Successful investing isn't a sprint, it's a marathon. The people who really win aren't the ones who get rich the fastest, they're the ones who avoid the big mistakes and simply stay in the game, year after year.
So, I'll leave you with a question to think about. Looking at these 5 landmines, which one have you seen people fall for the most? Maybe one you've even been tempted by yourself. Recognizing the traps is always the first step to avoiding them. Thanks for watching.